Forging is in focus. Lalit Khetan is joining us now. Mr. Khetan, afternoon. Thank you so much for your time. You have shared very high growth numbers, consistent growth numbers for in your latest presentation. Can you tell us what are the drivers of each of the segments which you're given? Because you have been getting good order flows trickling in. Now your company is transforming from a traditional forging company to new areas of growth. If you can tell us more about it.
Yeah, good afternoon. So yes, the latest presentation shows how the company's revenue are going to grow and how it will come. So basically, what we are looking at growth from auto always as non-auto sector also, and non-auto will be going to be a major driver for the growth in upcoming next 2-3 years. As we intend to change our auto non-auto mix right now from 78-22 to 70-30 in the next 2 year time and 60-40 in next 5 year time. So certainly major growth will come from that area, as company also gave the guidance of growing at least 15 to 20% per annum over the next 3 years on the CAGR basis. So on the basis of that, and railway will be the one of the major driver of this growth. And apart from that, oil and gas, tractor, and off highway, all the industry also will grow apart from the railway.
Absolutely, sir. Thank you so much for joining in with us. This is Vinny joining in the conversation as well. So, in terms of obviously, could you just highlight a bit more in terms of your guidance as well? You've said 56,000 to 5,600 crores to 6,000 crores is what you're expecting in terms of revenues by FY26. So, given these opportunities that you're seeing from railway, have you factored that in, or, if that more opportunity comes in, would you see higher growth over there then?
Yes, certainly more opportunity comes in that will add further to the revenue. Whatever is right now we are looking at, we are considering that only.
Okay. And sir, in terms of orders that are trickling, from which geographies are you seeing these orders coming in? What is the outlook on that segment as well?
So see, our recent order wins are from the basically North America and Europe, and I think we are doing quite well in this territory. And as we are hearing from the you or the other channels that uh, North America is moderating or Europe is moderating, but for the RKFL, we are in the sweet spot. We are getting new and new orders and new customers. So that's why we are looking for quite a good growth in both territories also, apart from the growth in domestic market. So overall, we are looking to grow across geography, across product segment, and we'll be adding new verticals also on the product side.
Okay, new verticals also you'll be adding. So, you did highlight a bit in terms of that EV segment growth. What exactly is the growth rate that you're expecting that? And obviously, you did highlight in terms of contribution as well. So, for FY25 and 26, what would be the contribution from this segment?
So see, if we look to specific to the EV, right now we are only 2 to 3% of our sales from EV, and if you look at FY26, it should be 5% plus from the EV only. We are not seeing a very significant increase, but 5% is also good.
5% is also good, and what you're looking at as well. So, just in terms of your margins as well, medium term, what is the margin outlook that we have for the company? This 20-25% range is something that you could be seeing sustaining going forward, given that we would see a change coming in the mix, or maybe a higher rate is something that is expectable in terms of the margins, EBITDA margins.
So these margins are very much sustainable. Whether endeavor will be to improve upon that, and mix will only help us to improve upon that. So target is to at least improve by 100-150 basis point from here on in next 2 years.
To improve 100-150 basis from here on as well. And just lastly, if you could just highlight the steps that you're taking for the turnaround for some of the new acquisitions that you've made. What is the strategy on that front?
See, if I talk by one, like JMT Auto, it was, I will say, one of the best company of Amtech Group as well, Amtech Group. We have taken over and we are in advanced stage of negotiation with or talk with the customers, where they are very eager to also to give the order, and we hope that we will be profitable in very first year of operation in JMT. Same thing is ACIL, that was Amtech Crankstar, that's a machining unit focusing on PV and tractor segment. And that unit is already running. They are doing a turnover of around 60 crore rupees per annum. But we know in the first year we can do 125 to 150 crore of turnover. That is FY25. And that itself will make profit, because both these companies will make more than 20% of EBITDA at their own. So all these companies will, from the first year, will start sustaining. And if you look at FY26, then you can see the real worth of these companies. And we are quite confident in RKFL, as we are in discussion with my customers. across the geographies, and they are also very positive about these acquisitions. They are looking forward us to start production on these.
Okay, sir, thank you so much for joining in with us this afternoon on ET Now. A pleasure getting the updates coming in for the company from FY26, new acquisitions, how they pan out as well, and in terms of the EV segment outlook as well. Thank you so much, sir, for joining in with us
Thank you.
on ET Now. It's a pleasure having you on the show. As of now,